Many of the changes that we're seeing in Silicon Valley and up and down the west coast of the US have already migrated to Europe, and we're seeing in deals here. So for example, one newer phenomena that's very popular in the Valley right now is at the very early stages, angel investors and even traditional venture capital investors are doing these very small investments, $20,000 or $30,000, $50,000, and putting them in many, many companies. Traditionally, that would be done with convertible debt that would then convert to equity. Now it's in fashion to do an instrument that is just pure equity, that has no debt features, doesn't pay interest, and doesn't have a maturity date. If you do a subsequent equity financing, it converts. If you don't, it goes away. And so you could think of it like a gift almost if you don't ever do an equity round. And it evolved out of investors realizing, well, if the company fails, they're not going to pay us back, so why pretend? That was shocking to people in the beginning in the Valley. But I was very surprised and intrigued that there were several European investors yesterday who explained that they've seen that in the UK and one had seen it in Spain already. So that's a quick migration. The other thing that we've seen a very significant change in deal terms, and this really affects the corporates as well as the financial venture capitalists, is at the late stages, we're seeing these very large transactions. Private companies raising $100, $150 million at once, where in the past to raise that kind of money, you would typically go public, so have a public float in a stock exchange. Instead, they're raising that money privately at very high valuations. So it creates a challenge for investors because those large dollar amounts are coming from non-traditional venture investors, hedge funds, private equity funds, and even some mutual funds. They're investing in the private market because those companies are choosing not to go public, so they don't have the opportunity in the public market. And there's so much money trying to rush in. This is what's referred to as the unicorns. So much money rushing in that they're bidding up the prices. So for a corporate investor, it's very hard to justify those crazy valuations. What I think the most successful of the ones I've been to, in part the quality of the speakers is tremendous. And it's been sort of action-packed, back-to-back with very high-quality speakers on interesting topics. It's also drawing people from a broader range of industries. The corporate investors are realizing if they share some of their knowledge with each other and coordinate closely with venture investors, financial investors, they will all succeed more.